Our call today slaps the only sell rating on Target. It comes today from MKM and potentially impacts several members of our investment committee who own shares, you among them. Courtney, what do you think of this call?
Let me be careful about my response here. I do not think that this is the right call by any means necessary. I mean, Target has the ability to continue to monetize on the digitization of our economy right now. And if you can't get that stuff Steve Weiss wants from Amazon next day, or you need it today, guess what you're going to do? You're going to order it on your phone, and you're going to drive up and pull up outside of Target. Someone really nice and friendly is going to bring that item out and put it in your trunk. I think Target is doing a phenomenal job adjusting to COVID, and it's going to be something that they'll continue to be able to profit on in the years ahead. It just probably sped up the digitization of their stores. So this is a name you're going to hold and hold and hold. Selling it and going to 105. If it goes to 105, I'm buying more.
Okay. Steve, in light of the fact that we're going to have a Target love fest on this show, I'm going to have to take the devil's advocate side of things and read from the note, which suggests that MKM does not believe the online audience monetization opportunity is enough to offset the physical store concerns. They also say they expect competitors to increase capital spend and price investment, which historically has led to Target comp store sales decelerating, deteriorate customer satisfaction seen in Yelp scores, declining Red Card loyalty penetration, heavy overlap with Walmart, an aging store fleet, negative skew to regional population growth, foot traffic underperformance related to COVID disruption, heavy skew to states that are open and offering more competing retail options. None of those are a concern to anybody here. We're just one big Target love fest.
You know, it's, look, I read the report. I thought the report was okay, although I disagree with it. We're just drawing different conclusions on it. Target, you can't look at the history because Cornell hasn't been there for the entire history. So take that out, number one. Number two, I don't recall ever buying or selling a stock based upon a Yelp rating. So, look, Target is
I know, but there are a
leader.
lot of other reasons
That's
they
really
cite, right? Let's
yeah, no, and the other, and I'm making little of him. He thought it was a well thought through report, just comes to the wrong conclusion and looks at the facts the incorrect way. They are building an incredible online presence. They've shrunk the stores. They've done everything you have to do to be a survivor and a leader in this. So there aren't that many strong retailers out there. It's survival of the fittest. And when Darwin comes along and taps one in the shoulder, it's going to be Target. So look, they'll have cost issues again this quarter, I'm sure, particularly with I mentioned about UPS and FedEx, but they'll get through it. Think of what it does to the others that don't have the capitalization and the customer base. So I agree with Courtney. I'm feeling very at one with Courtney today. We're agreeing on a lot. So that's great. So keep her on the program. No more Lebenthal. And I'd say that, yes, Target's what I would buy at close down.
She's probably feeling bad about that. Look, I want to get to Pete Najarian in just a second. I do, though, want to get down to Kayla Tausche in Washington, D.C. with breaking news for us. Hi, Kayla.
Hey, Scott, the United States Senate has failed to advance a supplement to state unemployment insurance. Senate Republicans had tried to get unanimous support for extending those benefits at a $200 weekly level, which Senate Democrats, led by Chuck Schumer, objected to. They, in turn, tried to pass their version of the stimulus package called the HEROES Act, which House Democrats passed in May, and that is expected to fail as well, Scott. This comes as the White House chief of staff told reporters last night that they are nowhere near a deal on a future stimulus package, and as those enhanced unemployment benefits for millions of Americans are set to run out at the end of this week.
All right,
back
Kayla.
to you.
Yep, appreciate the update there. We'll follow it, see if there's a market reaction in the hours ahead. That's Kayla Tausche. All right, let's bring in Pete Najarian. Pete, I want to talk to you about this call. Fully aware that even if Armageddon was on the horizon, you wouldn't tell us to sell Target. Okay, let me just put that out there. And you know it because that's why you're smiling the way you are. Did you read the note? And is there any validity to any of the concerns that this analyst happens to raise?
Well, some of the things are really odd to me, Scott. I mean, specifically when he talks about an aging store fleet, when this is a company that just spent $7 billion committing to actually upgrade all the stores. I don't understand that at all. And I think there are other areas as well. You look at the digital side of things. Now, Walmart had a great quarter last quarter. They were up 74% on the digital side. Amazon was up 26%. Target was up 141%. And then you look at Shipt, which is up 280%. So there's a lot of different things going on here. And when you think about it, during the early parts of the pandemic, when a lot of folks were closed and there was limited in terms of what people could buy, where they could go, Target was selling the low margin side of things. If they can do what I think that they can, which is convert some of those folks into people that are going to come back to the store, not just for the essentials, not just for the groceries. Maybe they get shirts. Maybe they get kitchen items. Kitchen items, by the way, in the last couple of months, up about 25% of sales. So when I look at this, it just doesn't sort of add up, Scott. And I think what you're seeing today in the market itself, look at the reaction of the stock. It is not reacting as a stock that has a sell put on it today in a market that was down 500 plus points earlier. It just doesn't make sense to me right now, Scott.
I hear you. I mean, look at the stock performance over 3 months and a year, Pete. And I'm just kidding around with you. You know that. Why is Target, though, up so much more than Walmart, up over a 3-month and year-to-date period?
Well, I think it comes down to the fact that we talked about this long ago when there were folks on the desk, a lot of them saying, hey, I like Walmart over Target. And I would look at them and say, well, when you look at Walmart at the time, it was trading $120 a share, something like that, and it's trading at a multiple of the 20s. Well, at Target, when it was trading in the 80s and then towards 100, we were talking about multiples, and just the multiple alone made me say, why isn't Target the better buy here? Eventually, they did catch up. They've caught up now. Now they're very close in terms of PE. The difference is, however, they have better growth, bigger growth, and the fact that their margins are going to be better because it's not 51% or more groceries like Walmart is. Target's a company that actually has 5 different quadrants, 20% each. That's been the goal of Brian Cornell, to be a company that actually can lean on the weakness sometimes of some of the different categories when they can lean on the strength sometimes of the others. And by the way, Costco, which we all love. We love Costco, right? We think it's one of the great companies of all. It's trading at a 35 multiple. So Target trading at, call it a 26. It's still probably pretty cheap next to its peers.
All right. Good stuff. Pete, thanks for coming on. Had
Thanks,
to get
man.
your take on
Absolutely.
Target, obviously, with that note out today. That's Pete Najarian.